This is Satya Pradhuman of Serious Research. The latest issue of Global Positioning is just out. The Global Positioning report is a fundamental take on key cross markets that we dive into. The title of this report is Improving Credit and Profits to Drive Asia-Pacific. This chart here represents critical credit spreads seen across regions, not just in the US, but key emerging markets. And this is very telling because what it suggests is that the purple curve here represents US credit comps. Now, if you look at where we are today, we're roughly a 300 basis point spread of high yield to treasuries in the US. These numbers are roughly 30-year lows. And importantly, when we look at Asia and Latin America, what we're seeing in these key emerging markets is that those credit comparisons, which are generally much higher, are converging with the 30-year bullish lows. This is really important. In this report, we dive into specifically Asia Pacific as a possible beneficiary. In that market, what we're seeing is top line growth begin to stabilize. That's the sales numbers are starting to settle and rebound. Additionally, the earnings estimates have continued to climb higher. So we think this allows us to put much more focus on Asia Pacific as the credit cycle seems to be unlocking. Counter to this, our concern remains Japan, as their central bank, the Bank of Japan, continues to tighten short-term rates. What has occurred in the last few months is there's been this first of all, some weakness in the Japanese equity markets, but on top of that, a corralling of investors into a handful of defensive shares. As a result, what we're now officially seeing is a fairly crowded market. This basically relates that investors have bid up leadership stocks, generally defensive in nature, but those multiples have now far crossed what should normally be seen. So to some degree, we think there's more volatility come. This idea of playing defense in Japan really does make sense. It becomes more pertinent given what we're seeing. Take a look at the full report, and as always, happy to take your questions. Thank you.